I know that your first deal with your company was a large one. What was the size of it again?
A $70 million ready mix company.
70 million.
Yeah.
How do you sell a $70 million company?
Very similar to how you sell a $2 million company.
Most surprising thing that you've ever encountered during the due diligence? I know you originally were in capital raising. How is your going from capital raising to deal making? What's the correlation, and what have you learned? What did you learn in capital raising that has aided you and now being an M&A?
Yeah, raising capital was, I think, the most difficult thing I've done in my entire life. And when you're chasing down capital sources, they tend to run from you. So and when you do get a good deal done, even if it's a wonderful deal, anything could happen. It could always fall apart, and you're usually the one to blame in that scenario. And so with the strings that were attached to raising and money and fundraising and just the complexity and the difficulty of it, I just started falling in love with corporate finance and M&A, and I had really good mentors in the space. So I think I just fell in love with it, had a passion for it, and decided that's what I wanted to do. Yeah.
And I know that your first deal with your company was a large one there. What was the size of it again?
Yeah, the first one that I led at the bank was a $70 million ready mix company.
70 million.
Yeah.
How do you sell a $70 million company?
It's very similar to how you sell a $2 million company. There's some added complexity with legal and, of course, complexity at the ownership level. Maybe you have a board instead of just an owner-operator, or they've been through a recapitalization or a deal before. So they're more sophisticated. They really know what to expect, and they know good service. And so if you're not at the top of your game and really know what you're doing, it's difficult to find those types of opportunities.
Yeah. So is it hard selling a business?
It's incredibly hard in my opinion. I think there are a lot of folks out there that get into it with the idea that it's going to be a lot like a transaction of any sort of asset, whether that be a vehicle or a house, and the emotions that are attached to this particular asset make it far more complicated. I mean, you end up being somewhat of a therapist, a counselor for your client over time. I've had clients cry on my shoulder during difficult, heated moments of conflict in the boardroom.
Yeah. What are the top 3 things that you've seen, that has led to the killing of a deal or the progressing forward of a deal?
Well, there's 2 really that come to mind right away. Number 1 is the owner really is not ready. If you don't establish the need to sell the business with the owner before you really get started, then I think that at the end of the deal, people get cold feet. They tend to see this company that they've bled and cried over and built for the last 20, 30 years as a part of their family, a part of their identity. And so if they're not totally committed to a recapitalization, bringing on an investor, or selling the business outright, then it won't happen. But number 2, I think the second most common reason is financials. They just don't go into an M&A transaction with the right preparation, the right mindset, and usually some inflated sense of what they're worth. So ultimately understanding the value of your company, the way to drive value, and then making sure that your financials are dead accurate to where when I go to a quality of earnings, get into a quality of earnings, we have a buyer who's racking up money on the buy side to pay for due diligence. They're not going to see some massive swing in their earnings, because if that happens, that's one of the most common ways to kill a deal.
You can't describe quality of earnings as, I know that, in my experience, with the smaller deals, buyers don't tend to really care, as much as, a $70 million deal. So can you describe what quality of earnings and why is it so important?
It's basically a financial and operational audit of the business. The representations that we made in marketing the business up front have to stay the same through their due diligence. One of my favorite things to say to clients is, surprises are for birthday parties. They're not for due diligence. We should not have anything come up during that time period. So if you do have something that you don't think is positive for the narrative, tell me now, as it's going to happen, especially at that size where the smaller size companies, a quality of earnings light may cost $10,000 to $15,000. You hire a Cone Resnick to do quality of earnings on a $70 to $100 million company, and it may cost upwards of $200,000.
Wow.
So the investment that they're making in buying a business is pretty substantial. Yeah. And if they find a surprise, it can be totally detrimental to the trust and the relational equity that's been built between the two parties.
Yeah, man. What have you mentioned, not getting surprised, during the due diligence. Describe something that, most surprising thing that you've ever encountered during the due diligence.
Man, I've run into a few different things, whether it be, like I said before, financials, a huge dip in the earnings based on a negative adjustment that we found. Maybe there were intercompany transactions that were double counting, or maybe it was the operator was really, maybe it was a positive adjustment. Maybe they were taking money out of the business in one area or another, and that affected the earnings in a positive way, but made it more expensive for the buyer. There's so many ways that an M&A deal can end up dying. And so the commitment that you make to one another at the LOI stage, I think a lot of lower middle market and Main Street intermediaries don't take that as seriously as they probably should. But I think the LOI stage is where even if there's no escrow or money being given or received, the commitment that the buyer is making to the seller is important for the relational equity of the deal, for the transaction, the trust that each party has with one another. You have to make sure that everything that's lined out in the LOI is what happens at closing.
Yeah. How do you adjust, or what have you done to, when you face those surprises and challenges? How did you adjust for it with the financials being better and the price going up with the buyers? Did you switch buyers? Do you stick with the same buyer? How do you adjust those factors?
It's a very scenario based decision. It's talk about one of the most difficult parts of M&A is being able to make extremely high stakes decisions on the fly. Yeah. So, whether that means that I'm really confronting either who I'm representing, my client, or the buyer, it's usually going to be one of the two. And doing that in the most professional and emotionally healthy way usually tends to give the best results.
Yeah.
Yeah.
One of the big things in M&A is the deal structure. And structuring it in a certain type of way that, it's great for the buyer. It's applicable for buyers as well as protecting the seller, since, the seller's your client. Describe, how you structure deals, and give me examples of what mechanisms that you've incorporated in your deal structures. I know there's a ton.
Man, holdbacks, certain indemnifications, reps and warranties, whether maybe it's a performance-based seller note. There's hundreds and hundreds of ways to structure a deal, and usually it's structured to mitigate risk for the buyer. And most of the time, the seller does not understand that. They don't understand what risks that the buyer is willing to take on. They're kind of blind to the risks, maybe the liability that they're taking in their own company. And so that piece of education can be rather difficult as well a lot of the time. Just making sure they understand, is this market in this situation? Is this normally asked for? And if you're not educating the client on and giving them a heads up as to what's going to happen before it happens, it feels like a complete betrayal when they get to that point. So like, net working capital is a
Yeah,
very good.
so yeah. How do you educate a client on working capital? I know that's always
It's always a point of contention.
Yeah.
And that's a very good example of what I'm talking about here. So if in the beginning stages of talking about the value of their company, you don't describe what they're actually going to have to pay in tax, what's going to be held in escrow back from the purchase price, and then how the purchase price is going to be adjusted for the working capital needs of the business. You wouldn't a dealership would never sell you a car on the lot and not give you gas in the tank.
Yeah. And that's what working capital is. Working
That's
capital
working
is
capital.
essentially is either in the form of accounts receivable. Do you ever have cash? I know, that could be a finicky thing. So, the cash or accounts receivable. What have you seen that, working capital has been made of?
This is an interesting topic, especially at the level of M&A that I've recently been participating in. It can get pretty nuanced. So there could be an adjusted net working capital adjustment and a peg that is set by the private equity firm and a true up 60 to 90 days after the deal closes. That mechanism can get extremely complicated, and it's just it's unto both parties wanting to get more or less money for the deal or more or less money in the bank account. So whether you're over delivering whether you're delivering an over or undercapitalized asset at the beginning of the day. Like I said, just having gas in the tank to get to where you're going is really important. If all of a sudden in month 1 or 2 you don't have enough money in the bank to pay payroll, you're gonna be upset.
Yeah. And you mentioned private equity. I know there's been a growth in private equity. We hear it all the time. Sports teams are being acquired by, private equity. I recently saw that, the Patriots, Robert Kraft is selling a stake to a private equity firm. Describe what private equity is and how has that impacted the marketplace you're seeing?
I think traditionally private equity and venture capital specifically have been seen as these evil people behind the table that are investing in businesses, trying to financial engineer them, drive them into the ground. That's not what they are. These are regular people who want to see a business go to the next level, and they want to make an investment to make that happen. There are more founder-friendly private equity firms, and then there are more financially motivated, do it by the numbers, not as focused on company culture type firms as well. And that's a large part of running an M&A transaction. I'll give you a good example. We had a utility services company. They did 8 million of EBITDA, but really it was about a $5 million EBITDA business. They had some significant government funding that was going to stop, and we had to make a negative adjustment to the earnings because of the RDOF funding in the United States. And ultimately, what ended up happening is we had 780 inquiries on that company.
780?
780. We had
I just parsed through.
just put my head down.
Yeah.
We had over 25 indications of interest. It came down to about 10 LOIs.
Yeah.
And we had all these committed capital firms, and they all were putting pretty great bids on the company. So it's a great problem to have. We just don't know who to partner with.
Yeah.
And it's an even more wonderful situation when my clients come to me asking what I would do, because I've built so much trust and relationship with him. I've been in the trenches for the last 5-6 months. We've prayed together. We've bled together. We've gone into conflict together, and we've got this thing sorted out. And now we're at the end of choosing an offer, who we're going to go forward with over the next 60 to 120 days to make this thing actually happen, which is really the most difficult part. And we ended up choosing an independent sponsor over all of the committed capital firms.
Yeah.
And the reason is the founder of this particular firm, his grandfather was on the board of one of the largest co-ops that they served as a customer.
Oh, wow.
So the culture fit was outstanding. And we cared about the executive team in that company. They were all in their 30s and 40s. And I personally got to see every one of those young men walk away with a life-changing amount of money in a small town where they really get to write their own ticket.
Yes.
And the impact that I had on their lives, I still get calls to this day, just like with tears in their eyes, grateful, calling me, talking about how they love their new partners. And I would take that phone call over any money that I've made in this business any day of the week.
That's big. And I'm curious. So, you lean towards I call it a common connection there, right? Where it was a easy transition there with the buyer. But with 10 LOIs, I know in other industries, right, there would be like an auction process. Did you find yourself in an auction? Did the price change, with the buyers, like similar, to
Oh
other?
yeah, the initial bid started in the low 20s, and we ended up at 30 million.
Okay. Oh, so
So we drove some pretty significant value through the auction
yeah,
process. And I mean, talking about valuation, at the end of the day, you can do earnings, you can do a market approach, you can do a discounted cash flow, you can do an income, like all of those things are really valuable.
yeah.
But it is an oversimplification. But even at the highest level of M&A and doing deals, it's worth what someone's going to pay for it.
Yeah, yeah, you're there all the time. The value of the business at the end of the day is what a buyer's willing to pay.
Yeah.
You do all the things to, protect yourself, to shore it up, to validate there. So when you go to the market, but at the end of the day, is what a buyer's going to pay. I saw a deal. It was an HVAC company, and they were acquired by a larger private company that paid 10 million for them, and their cash flow was, EBITDA was like 800,000. I remember looking at it. I worked on the valuation for like tax purposes. I remember speaking to the seller like, "Wait, how did you? I cannot get to that number." And he was like, this is what I wanted for the business. And I told them that, and they paid.
They paid.
Yeah, at that.
You know,
How often do you see that, especially in you working with larger size deals? Is that common?
depends on if it's a one of a kind asset.
Yeah.
That's the only way that something like that happens. And usually, I tend to protect my client from that type of expectation. So we're going to do a lot of work on the front end, like work with you to help really guide the client into what's a reasonable amount that someone would pay for this business. And then, it's funny, I end up talking more business owners out of selling than into it.
Why?
That actually drives a lot of business for me. It's kind of it's a misconception, right? But at the end of the day, if they have some idea about what selling their company is going to look like, and the amount of money that they're going to receive, and they haven't considered taxes, they haven't considered escrow, they haven't considered net working capital, they haven't considered the things that they're going to have to do to adjust their lifestyle. How much cash flow do you need to support your lifestyle? So coming out of financial planning, which was, didn't end up being the right fit as a career for me, but I was able to sit for my CFP at one point. I tend to, at the very front of an engagement, lead a client through, well, let's look at the valuation realistically, conservatively. And then let's say that we're able to sell the company for this much. What would we need to reinvest that capital into to support your current lifestyle? And if you can't support your current lifestyle, then I would be doing you an absolute disservice by advising you to sell your company. And building that kind of trust with somebody where they know I have a financial incentive, but I'm telling them not to do this, even though it would really benefit me, tends to just build a lot of trust.
Yeah.
And that's how I, over a very short period of time, graduated to that upper, the middle market, really,
Yeah.
of M&A.
Yeah, would you say that's one of your biggest differentiators? I've seen that that's not really, a common thing. Most oftentimes, they do it, an M&A firm will do the tax planning, after the fact, or do a spreadsheet and they say, hey, this is what we're looking at, but typically tend to punt it off to somebody else to do that and just focus on the selling there. Would you say that's something that differentiates, who you are and your firm? And then how's that aided you there in your clients?
I think the biggest differentiator that we have, which is, this is going to sound sort of cliche to me and you, because I feel like everybody in our market is using the same pitch as an advisor in our space. But hey, I'm the boutique investment bank, and I come from this level of M&A, and I help the small business owner. I think there are very few people that actually have that level of experience, and it's a very unregulated industry. So you really have to be careful with the people that you decide to hire as an M&A advisor. If they haven't engaged with a client that has a similar size business as yours or in the same industry, I've had crazy conversations with these people who represent themselves as middle market M&A advisors. I was consulting on one deal recently, looking through an LOI for a peer in my space, and I noticed in the sources and uses table that it wasn't clear whether the rollover equity was equity value or the proceeds needed to maintain that level of ownership. And I asked them, an advisor, the question, like, do you know whether or not this is like the proceeds or the new equity capitalization or the enterprise value that he's rolling over, the equity value? And he said, I don't know. and I thought, oh my God, that could mean millions of dollars for the client. And you have no idea. That's a shame.
Yeah. So, how oftentimes do you see a rollover equity component?
It's pretty common in today's landscape. It's actually something that has deterred a lot of people from SBA type financing recently.
Yeah, because it's
Specifically with the law changes, the regulation changes around who needs to personally guarantee the note in an SBA note.
yeah,
They're really for owner operators taking out SBA loans. They are way against private equity firms using that type of debt.
yeah,
Is what I've seen, and they're trying to incentivize against private equity firms using it. And the way that they've done that is now if you have a bunch of LPs in your fund that maybe have only invested $100,000 or 200 grand, and you're going and buying a $5 million company, now every single one of those LPs potentially has to personally guarantee the entire SBA note that you take to acquire that business.
yeah,
So, yeah, it's really shifted the debt side, and how much equity are you actually putting into the deal? What does your debt service actually look like? How do we sustain a good deal for the buyer and the seller, and make sure that they're not going to drive it into the ground because they can't meet their note,
yeah.
they can't make their payment.
That's true. Let me ask a question. I know, Feds recently, slash rates, and there is a, optimism and perception that we're going to see at least about 3 to 4 more, rate slashes before the end of the year. What have you seen there with the rate slashes, or the perception of? Has it led to more activity? Less, or uncertainty? Describe how rate slashes impact your business and what you do.
Once upon a time, a long time ago, when I was young and dumb, I thought I knew something about behavioral finance. I thought I knew something about how the economy worked. At the end of the day, I think that the private markets are really, really telling. Because people don't have the liquidity that they have in the public markets. And so they can't make rash decisions. They can't sell huge blocks of equities at one time based on an indicator that's not super telling of the actual macroeconomic environment.
Yeah.
And so I don't try to speculate on where interest rates are going. Deals either work or they don't.
Yeah. That is true. That is true. I've seen, heard and witnessed a slight slowdown. Sometimes, you hear that is due to interest rates, or the macroeconomic environment there that's impacting those assets there. But it was interesting, right? And we're talking about sports. That seems to be going for 10, 12 times there. Oh, what do you think about that? Like the especially now you're doing larger deals, and like it's the multiples you're probably seeing like 8-time multiple. When you see a business doing sports, right, with cash flows of pretty good, but 30 million, but selling for 20 times there. What does that make you like? How do you feel about that? Overinflated, underinflated?
I think at the end of the day, my expertise doesn't lie in sports franchises, but people see those as like I mentioned earlier, my earlier comment, a one of a kind asset.
Yeah.
A lot of the time so the comparables are a little out of control.
Yeah.
I think it's a new frontier for people, for most people, and it's difficult to attribute a value. And do you do that based on earnings? Do you do that based on, some other metric?
Yeah.
It's just not my area of expertise, but yeah, the market's a little crazy.
What industries do you like, and which industries do you focus on? Your top three.
My industries have developed. My industry expertise has developed based on the deals that we've closed so far. So, like I said earlier, concrete, within concrete, manufacturing, recycling, contracting, utilities, within utilities, field services, engineering, utility contracting, maintenance, um, freight forwarding, so logistics, so freight forwarding and 3PL specifically. Um, Home services, so electrical, plumbing, HVAC, specialty contractors. Those are my main areas of focus.
And why is that your main area of focus? Like, what?
I've just been inside of those companies to really understand what it takes to own or run one of those companies. And without that level of expertise, it'd be very difficult for me to do the size deals that I've been doing. So, you have to really understand how that organism works if you're going to represent it,
Yeah.
in my opinion. Private aviation is the only one I missed. That's one area where my best friend of 23 years ended up working for one of the top aviation consultancies and brokerages in the United States. And so I've gotten loosely involved in some transaction consulting and potentially some M&A transactions upcoming in the Part 135 space and the likes.
Yeah.
Yep.
Okay. Understandable.
Yeah.
Understandable. And as a closer, I'd like to know, you've touched on multiple different things here, but what's your most favorite thing about what you do? Like, what do you enjoy when you walk into the office, when you're talking to a client? What do you enjoy the most about what you do?
I'll go back to the phone calls that I get, the impact that we make on a client when we are able to help them sell their business. Yeah, one of my best friends ended up helping introduce me to the concrete company, which was one of my first M&A transactions, and he was going through some real difficult life situations. Ended up sending me not an introduction, but just a phone number for the business owner. And I ended up calling the business owner using my referral partner's name, starting a conversation, which ended up turning into a $70 million deal for the firm. And we ended up paying him a $280,000 referral fee.
Wow.
And that was life-changing.
Yeah.
And again, he called me with tears in his eyes. Really grateful for what I had done for him and for how I had changed his life, the way that he was able to provide for his children. So that's why I do what I do.
Yeah.
Yeah.
It's a change, as long as it's changed, in fact.
It's incredibly lucrative for sure, but it's at the core of it. It's extremely rewarding to be that trustworthy person. The honor of getting to help somebody with something that's so deeply personal and important to them, it drives me.
Yeah. If you could describe yourself and your firm in one sentence, what would that be?
In one sentence, describing our firm, I think it would be driving impact through M&A.
Yeah.
Like really changing people's lives for the positive. It's my favorite part about what I do. It's what keeps me up. We had situations. I represented a company in Hawaii here recently. Lots of site visits. That was wonderful.
Yeah.
We went 6 times in 1 year.
Yeah.
I've never been happier in God. But during that time, one of the more difficult parts, we had an M&A attorney that was on vacation in France. I had a client that was in Oahu, and I'm here in Dallas. And the only time that they were both available, France in the morning, Hawaii at 9 o'clock at night, and for me it was 2:30 in the morning.
Yep.
And so I had to be on maybe a few calls, going over a purchase agreement and the waterfall and the operating agreement and scrutinizing the operating agreement down to the minutia at 2:30 in the morning.
Yeah.
The only way you have the drive to do something like that for a client or a customer is you really care, because you know their entire professional life has led up to this moment a lot of the time, and it's in your hands. So being the person at the wheel is high. It's important.
Yeah, and how do you? Where's the name Grantia come from? From Grantia Equity Partners. Where'd you come up with?
Um, it was a Latin phrase that I was thinking about legacy in my own family. My father being in the business, me starting my own company. We don't, as a family, we didn't have a lot of mementos handed down generation to generation. So I decided I was going to be that person. I designed a family crest and a family motto, and under the crest it says "De gratia Rubin," which means by the grace of God, a Reuben. But another translation for that word in Latin is favor. So meaning like favor of having favor in a particular situation, favor of God. So I just decided to put my best foot forward, and I knew I was gonna need. I knew I needed a lot more than my own wits and drive to build a successful M&A shop at a young age with no money. When I decided to leave the investment bank and start my own firm, I had nothing. I worked with a couple of mentors that really believed in me, and they lent me money at 0% interest because they cared about me to just give me a little bit of runway. I liquidated my 401k. I I burned the boat, and I jumped.
Yeah.
And I would not suggest anyone do that unless they absolutely had to. I had a young baby, a new family. I mean, it was one of the most intense periods of time in my life, but it's paid off. We've done $163 million in M&A activity in the past few years, at 28 years old.
Yeah.
And I have a very modest, small 7-figure business, and I get to be an entrepreneur. I get to create my own life and my own lifestyle because of the risks that I took at that time.
I'm pretty sure we've all heard the verse there. It's easier for a camel to fit through the eye of the needle than for a rich man, for a wealthy guy to get into heaven, a rich person to get into heaven. So with your faith background and that in mind, why did you choose investment? Why did you choose M&A? And how does your faith drive you and impact your day to day and how you approach your clients?
I think that's likely true. The reason being just the amount of stress and the amount of responsibility that you shoulder as a small business owner that takes the sustenance of other families on your shoulders is weighty.
Yeah.
And the conflict that occurs when you start to grow and build is weighty. Those things are very difficult. And so the opportunity to stumble is 100-fold when you see some success. So because of that, I think it is harder as someone who has had that level of success. At the same time, I think you have 100-fold the ability to give back to the people around you, your community, to love on people. So I think it's a huge responsibility. I think it is much, much harder, but I think it also comes, it's a double-edged sword. It comes with the blessing and the opportunity to really make change happen as well.
Yeah. Yeah. I like that. I like that there.